Good day. Ira Epstein of Linn Associates with your agriculture wrap-up for this Tuesday, the 5th of November, 2019, and we're after the 2:30 time frame. So I'm just going to be looking here at the settlements and the grains, saying to myself, what's the news of the day? Well, a lot of people worrying about this Friday's report. We get more crop reports, get an idea of where the crops are coming in. We saw something last night, and it looks to me as though the cotton crop, which was interesting, it started off lower, but it finished higher because I think they're pretty normal in terms of their harvest. Same in the corn, they're not too far behind. So the markets aren't worried about that as much as they're going to be about yield and acreage at the end, but there's months of these reports yet to come. The good news today was that Canada, through Prime Minister Trudeau, announced that beef and pork exports out of Canada to China are going to pick up. Now, the importance of that, in part, is we also import Canadian goods, and that's less product coming to us, and that put a bid into the hog market. That doesn't mean there's a deal done yet between the U.S. and China. China is doing what they should do. They're negotiating hard to get tariffs removed. They're offering to remove theirs. They want the Trump administration to go. But as I've mentioned to you over and over, what would the calling card be, or the playing card be, you could say, for the next phases if you give up on all your tariffs? I don't think that can happen. I think a certain portion of them can happen, and maybe that's what the president needs to take some of the heat off of everything going along, because he doesn't have a U.S.-Mexican trade deal or a U.S.-Canadian trade deal in his pocket. The House of Representatives refuses to pick it up. When we take a look at soybeans for the week, we're down 2.5 cents. So right now, early on 2 days, nothing going on there. We're in the midst of a correction. You can see that on the chart. When we take a look at a daily bar chart of January soybeans, you can see that the market made its hole right through here, and I'll take to that lowest day of the 925 area. It's come back up, hit a high yesterday on the correction of 942, and it's just sort of sitting here right now. When we put the swing line on this, you get an idea of what the picture is. And what happened is the market, right through here, it's still been in a downtrend. Yesterday, that rally got through an old high here. So you no longer have the pattern of lower highs, lower and low. You now have a higher high and a lower and low. And today, you backed off again. Now, if you don't take out yesterday's high, 942.25, this pattern just stays in place. Take that out, and you could end up with higher lows and a higher high pattern, which would be the beginning of an uptrend, right? Where's the resistance? Put the 18-day average of closes on, and you see it's right there. So right at the key number is where the resistance in the market is. Close over that resistance of 941, and you'd have higher lows, higher highs over that. Don't take it out, and you're stuck in between the 18-day average, the 200-day average, and the 100. And if we put Bollinger Bands on, an algorithm designed to keep the market trading within them 95% of the time, we can see 4 or 5 days ago the market challenged that number, went back to the 18-day average, and just sort of sitting here. The importance that I'm bringing up is if you clear that 942.25, you really don't have any key resistance till you get up to the 956 level. When we look at momentum, the market had been getting itself into oversold territory. Oversold is when I define the slow stochastic readings, either of the legs, the K or the D. The red is the K. The D, just for reference points, is the blue one. When either are under 30, they're oversold. Now today, as you can see, the market still is in oversold condition. So we have a market that's working on trying to get out of an oversold condition, had a rally, didn't succeed in getting out of that, and it bucked into resistance right at that 18-day average of closes. In the meal market, we have a pattern of a lower low and a higher high. See that? This high went right into that resistance of the 18 and the 100-day average. I don't see a trend here. So this is more of a market where the traders are whipping it back and forth. Even if you take out this low, you don't increase the trend. You've got to get over this number, 306.60, and close over that to say, you got higher lows, a higher high over those numbers, but got a lot of resistance at them. In the soy oil yesterday, you went up and closed up and over what? You got to 31.87 on the close over the upper Bollinger Band of 31.66. Today you've settled back at 31.57, right under that number. So you've hit again an upside target that's giving you resistance. What is the trend? Well, the trend isn't there. You've got the lower low, higher high. What's the bias? You've stayed over this 18-day average, very frankly, since the very beginning of October, stayed there through the month, and now early November, you're still over it. So we have the bias up, an overbought market, not trending. When we come to the corn market, you came down today, got as low as 380.5. The lower Bollinger Band is 381, well, actually 380.5, right at it. And we closed at 381.75, right off that lower band. So you hit the lower Bollinger Band. It was the low of the day, and then you gave a bounce. Are we trending? No. You got the higher high and lower low. Are we oversold? Yes. The bias is down, and you're caught in this sideways action, just not going anywhere. In the wheat market, wheat came back up to fight the past 3 days at the 18-day average of closes. I guess you could say 4 if you want. You can even argue these are all getting there. Hasn't been able to break out one way or the other. An upside breakout can happen if you take out 316.5. You already have the higher lows, but you have the lower highs from this point and this point. So you got to take that out. Then you could argue you've got the higher lows, but you got to stay over the 18-day average, which is literally going to be right against that number tomorrow, and I don't know if it can do it or not. Momentum flattened out. It had been pointing down. Now it's just sort of flat. Difficult market to call because you have lower highs and higher lows right against that 18-day average, that line in the sand. In the sugar market, up to important resistance. We had just talked yesterday that if it can continue, you've got the higher lows, higher highs. You've got first the Bollinger Band, then the 100-day average with an overbought market. And that's exactly what it did. Now, this is the time of year where sugar often starts acting funky to the downside. We'll see if that happens, if this is enough resistance. Right now, who's in control? The bulls. Higher lows, higher highs, but you've hit upside targets, 2 of them. Pretty formidable resistance, and you are overbought. No reason to be short at all. In the coffee market, you're still running with this higher low, higher high profile and pushing out the upper Bollinger Band. And in the process, what we've succeeded in doing, take a look, both numbers over 80 today, both numbers over 80 yesterday, both the day before. It only takes 3 days to embed. The day before they weren't. So now that you've embedded like this, I'm going to look for the pros on good pullbacks in the market, should they develop, I don't know if they'll develop, to be willing buyers and support the market until the red line closes back under 80. What was resistance, the 100-day average, is likely the first support zone. If that gives ground, well, it's all the way back at the 18-day average. But if you were to drop 700 points, the odds of staying with an embedded reading near zero. Can happen, but near zero. I've got a lot of experience with that. In the cocoa market, I've said there's no trend, and I'm going to stay with what I preach. You just come down, you don't get any follow through, you get down to the lower band and the 100-day average, boom, you run back. Today, an inside day, when you got up to the upper band, you're just marching along sideways. Maybe I can call this a trader's delight if you're a contra-trend trader, which I'm not, where you're stabbing at bottoms, stabbing at tops. That's a good way probably to not trade, but in this particular market, it's what's going on right now. Next, the cotton market. And cotton, once you had this pattern right here, where you had the outside day up and you took out that day's low, the whole chart went funky. You pulled back, and you shouldn't have taken that out if you're going to follow through. When you take out the low of an outside day up, and this was the outside day, prices often run back to the closest of a moving average. Well, it's right there. And the market has been just playing games ever since then against it. I don't see a trend set up just here, so can't even discuss it. In the cattle market, look at the length of this embedded reading and look at what the market's done doing it. It just stays with it. It's sort of like stock indices. They're just doing the same thing. So The resistance, the upper Bollinger Band breaks, I still say, are getting bought by the pros. In the feeder cattle, the market down today a small amount, but you're embedded again. So I'm going to look for the pros to still buy. You did not have an outside day up, so on breaks, I think they would buy. What I'm always looking at when I get embedded readings, I don't like buying outside days. Let's assume you make the high first, then you come down, you're looking to be a buyer, but it took out the previous day's low and high. I back away from that is in my thoughts and when I write my updates and tell my clients my recommendations for them. I've seen those patterns hurt too often. You don't have that right here. In the hog market, as soon as they said that the deal was done between China and Canada for pork and beef, and remember in June is when that got suspended, but let's think about the company, remember that company that they're holding that Chinese lady from? That's Miss Ming, I call her, and that's not negative. I think her first name or last name is Ming. But to make a long story short, all you did is get back to the 18-day average. You did go limit bid on that news. You gave that up. You closed 25 points off of that, but you're certainly not in a downtrend. Are you in an uptrend? No. You're just sort of caught here. You got a lower low, higher high. You ran right back to that line in the sand to try to figure out what to do. Now, we know what? We know that right now harvest is moving full tilt. We're at November 4th. Fields are going to get to the point where the farmers can't get in them, so what are they going to do? They're going to work right now to get all the grain they can. Does that make a harvest low? What is it going to do in the pork centers of the world and the beef as winter comes in? What happens with that? Well, the Moore Research Center covers this going back 30 years and more. And what they do is you can work with their charts, and they also put out seasonal trades by the month. And they give you an idea if you bought on this time, how did that fare? If you sold it this time, how did it fare? And then they give you written reports on spreads and other markets. Now, I use these interactive charts. And the reason they're interactive is you can have a 5, 15, and a 30-year on them, and you can eliminate parts of them. Then if you move your cursor over, it shows you what happened. You can go to cash markets, you can go to the futures markets, and you're looking back in time to see if there's a pattern. Traders like me that are looking for certain historical things tend to look to see, gee, am I early on a harvest time? Is this about when it comes in? Where's that harvest low often come in? What about spring planting highs? So you're looking at these events and you're looking to figure out one more thing. They allow you to put on past bull and bear years. So if you think this year is bearish or bullish, you can put that on the chart as well, go back, and they define which years were bullish and bearish according to a very certain set of variables, and you get a game plan. Would I use this on my own? Absolutely not. Would I use this, and do I use this with other parts of my technical analysis? Yes. It's another tool, and I like tools I have reason to believe in and have validity. Do we get contra-seasonal moves? Yes. Do we get seasonal moves? Yes. So you got to recognize what you're in. If you'd like a 2-week trial to it, just go to our website, sign up for that under the free offers. You can also call us at any time. My staff will work with you, or you can click up here. I think you'll find us worth your time and effort to take a look at it. I'm Ira Epstein. Remember, never use seasonals just on their own. I can't be clearer than that. You have a good day.